Spanish data out this week raised yet more concerns over the euro area's fourth biggest economy. Bankia, the country's third biggest lender by assets, announced the state would need to invest $19 billion in the country's largest ever bailout. Nicholas Spiro, Managing Director at Spiro Sovereign Strategy, joins me down the line today. Nicholas, thanks for joining me. In your opinion, how is Spain going to afford this latest news?
I think that it's important firstly to take a step back and to stress that what we've seen in Spain over the past 3 months has been a dramatic deterioration in the country's perceived credit worthiness that has been mostly self-inflicted. Spain has played what was a relatively strong hand at the start of this year extremely badly and is now suffering the consequences. Practically every reform measure announced by the Spanish government, and this includes the latest bailout of Bankia, no matter how well-intentioned, is poorly received by the markets. Now, there are numerous reasons for this, but the overriding one is the government's persistent lack of credibility. The Spanish crisis has reached a tipping point. Investors have lost confidence in Spain. And clearly, the latest bailout of Bankia, despite being the most dramatic and the most decisive measure yet on the part of the government to shore up the Spanish banking sector, has still been poorly received. And this is due to a combination of piecemeal approach to the banking sector, skepticism about the extent of the losses and the recapitalization needs of Bankia and other Spanish banks, and also, based on the reports that we've seen, a very highly controversial scheme under which essentially the ECB would be de facto bailing out Bankia.
Spanish borrowing costs touched 6.4% this week to a new 2012 high. In your opinion, how much is this a result of Bankia's bailout request or yet more collateral from the Greek exit fears?
I think clearly the botched bailout of Bankia was the trigger for abrupt sell-off. A sell-off that certainly threatens to actually turn into a rout unless very bold and decisive measures are swiftly taken by Eurozone leaders to shore up the bloc's endangered sovereigns and their banks. The wider issue here domestically, as I said, is the dramatic loss in credibility on the part of the Spanish government. The bigger issue, certainly, and this is what the Spanish Prime Minister correctly referred to, is the fact that there is considerable uncertainty about the likely fallout from a Greek exit from the Eurozone, which we believe is likely probably later rather than sooner. This is actually going to be preceded by a very unsettling, muddling through period over the next couple of months. But clearly, when investors look at developments in Athens, they perceive them exclusively through the prism of likely contagion to Spain and to Italy. So essentially, this dramatic loss in Spain's perceived creditworthiness has been both domestically driven and externally driven. And these two factors are really making it extremely difficult for Spain to stabilize things.
Conservative Spanish Prime Minister Mariano Rajoy insisted this week that the country's banking sector would not need an international rescue. In your opinion, how likely is it that Spain will be pushed to seek international help?
I think it's very important to stress that Spain is in the solvent camp of the Eurozone. Spain is not a Greece, it's not a Portugal, if one takes the view that Portugal is also practically in the insolvent camp. Spain is a perfectly solvent country. Its banking woes are not at all on the scale of Ireland's, but is suffering the same negative feedback loop that failed Ireland in 2010. And that is the pernicious links between the Spanish sovereign, the country itself, its debt market, and the banks. And until this negative feedback loop is broken, Spain will be at pains to restore confidence. The problems in Spain are multifaceted, but the focal point for investor anxiety is the banking sector. It's very good news that Bankia's troubles are being addressed, but unfortunately there is a lack of credibility and continued skepticism about Bankia's losses going forward, its recapitalization needs going forward, and more importantly, those of other weak lenders, particularly amongst the savings banks in the Spanish banking sector.
Thank you, Nicholas, for talking to me. That's all from me today, but there is plenty on the Duke's Copy website to keep you informed, so check back soon. Goodbye.